I'm Gurveen Reiki.
Hi, I'm Shram Bandaru.
And I'm Jason Dunman, and our group focused on developing an interpretable machine learning model for insurance. So, our research focuses on developing an accurate and interpretable predictive model in insurance to provide interpretability and transparency to policyholders. The motivation of this study is that the internet has significantly changed how customers both purchase and pursue insurance. We want to identify how controllable factors such as make, model, and the age of vehicle affect the insurance premium. We aim to allow our consumers to understand not only what goes into calculating the price of these premiums, but also how they differ for each person uniquely. In order to accomplish our goal, we compiled information about a consumer to then build a profile and use the profile to build out a unique policy. We pose that our approach will provide both premium interpretability and transparency.
The insurance industry accounts for 3% of the US's GDP. Consumers are more conscious on where their money is being spent now. It is essential to make policies understandable to help customers justify their purchase. By creating a machine learning model that is effectively that they can effectively communicate with their client will increase their confidence in their purchase. Our research questions we focus on were how can linear regression machine learning build a model that is easily interpretable for policyholders, and how can we use machine learning to identify key factors that accurately produce predictions for policyholders and insurance agents. During our research, we compared studies that included non-statistical measures, and we found that other factors influenced insurance policies and transparency, which included data that jeopardized clients' interest, accessible information, and political implications. Our study focuses on statistical measures that create biases and data that jeopardizes interest.
We did this by splitting our methodology into 3 parts. In stage 1, what we did is we received the data set and interpreted it using EDA rules. In stage 2, we prepared the data for data partitioning and model training. So in data partitioning, what we did was assigned data types to features and target, cleaned up missing values, standardized features using z-score, and then cleaned up the data using further business rules. This was then split up into 2 sets, the training set and the testing set. The training set was then passed on to 3 different models, the logistic regression, the random forest, and the support machine. So what we did is taking those predictions from those models, we assessed them using RSME. So our insights. We started off with 6 different variables and wanted to see which factors influence the exposure level the greatest. From our model training and comparison, we used RSME to assess our model's viability and found out that linear regression was the best model to answer our research question. Our other research question was to figure out which factors affected exposure. During our data analysis stage, we noticed that the brand of the car had the largest impact on exposure. For example, Mercedes-Benz had the least exposure, but upon further analysis, we realized that there were very few Mercedes-Benz sold. GM, on the other hand, had an exposure level of 6.6 and is commonly sold in South America. The other interesting insight was the category of vehicles sold. Individuals with pickup trucks, both domestic and import, were deemed safer than sedan drivers. Lastly, being male, your exposure rates are a bit higher because in South America, most of the drivers are male.
So based on the profile that is built around a customer, we can use past data to compare similar profiles using contributing factors like make, model, and vehicle type. Using linear regression, we can show an easily interpreted model to a client and explain the relationship between their profile and historic data that explains the drivers behind their premiums costs. This can be a useful tool for insurance to sell more affordable or more policies by showing the drivers behind the cost of the policy so that customers can understand how to lower the cost, determine if insuring a customer is a good idea and feasible overall, and see the profiles of customers that are lower risks and offer them incentives to either join or switch to your insurance agency.
In conclusion, we found that having a restricted number of predicting variables and the dataset being from a foreign country was a limitation to accurately predict our target variable. The main variables that influenced the results were the type of vehicle customers own and their gender. Moving forward, having a local dataset that originates from the United States with more predictive variables such as average repair cost would be advantageous in increasing the accuracy of the results. We would like to thank Professor Lanham and our graduate student mentor Theo for their support on this project. Thank you.